webinar. In today's webinar, we have someone who frankly needs no introduction whatsoever. He's one person I have really admired in my television career as a market commentator. He's a true blue believer of value investing. I had a, uh, I was in Delhi and had a chance of meeting with him about 20 years ago. And that time he maintained one simple mantra: buy a good business at a reasonable price, run by a good management, and buy it cheap. 20 years henceforth, his mantra has not changed. But today it's not about getting a market view. Today it's all about understanding Raamdeo Agrawal, the investor, the person. Is it important to be a good investor or a good human being? Or a good human being has to be important to become a good investor? Well, in case of Raamdeo Agrawal, well, this is not only a good human being, he's also a great investor. So Raamdev ji, good afternoon. Thank you for joining us. We are very grateful to you that you've taken 1 hour of your time on a Saturday afternoon, and we managed to convince you to share your experiences with our audience, and lots of viewers would be watching this on various forums.
Yeah, it's pleasure and to interact with all the viewers of ET Now, and particularly now Nikunj Dalmia, who has improved so much in questioning. Earlier, I'm telling you, you were so much quick in asking the next question, but you have become very measured. I don't know, in last 12 months, you have changed your style. So that's very good. That allows people like me to be a little more slow and, explain the point.
And so I'm glad we'll have a long, detailed discussion today. It's not about aaj market mein kya hone wala hai, kal kya hone wala hai. This is not the forum for that. This is not the forum to discuss stocks. I want to start with the disclosure first. हम जो भी आज stocks की बात करेंगे, those will be only for illustrative purposes. Those are not recommendations. This is an education-dominated webinar where we want you to understand and benefit from experiences of Raamdeo Agrawal. Mr. Agrawal, it is said that stock market or share bazaar jo hota hai, it's a business which does not have any entry barrier. Anybody can become a stockbroker. Anybody can become an investor. It is a business where you don't need an entry barrier to start. You don't need a lot of money to start. You can start with 1,000 rupees also, and you can start with 10 crore rupees also. But in stock market, however, there are very few investors. 20 years ago when I started, the list of great investors included Rakesh Jhunjhunwala, Raamdeo Agrawal, Nimish Shah, and Radhakishan Damani. 20 years after also, even though this business has no entry barrier, it does not need formal education, it does not need qualification, it does not have a retirement age, yet the investors are still the same.
Yeah, see, the investment experience is very cumulative in character. So what happens is that I think at least I started like a useless fellow. In 84, 85, when I passed out from CA, I was a stock market buff. And I'm quite sure all the names you said, all of them at the young stage, they must have been stock market buff. They must be mad after the stock market, knowing nothing, but very excited about the stock market. That happens with a lot of kids I see in my office, whenever I meet anywhere, they all come to meet me. So that is there. The issue is, what do you do after that? When you start your career, whatever handicaps you have, you don't have capital. Like I didn't have capital. So first I had to figure out, how do I find capital? That is the biggest problem, because 0 multiplied by anything is 0. So first you have to find your patient capital. So how do you do that? So I had to find a business model which didn't require capital but produces capital. A business model where you don't need to put capital, but it does generate some profit. That was the sub-broking at that point of time in 87. So I'm quite sure all the investors you talked about, they must have had their own model of generating some initial savings, which then they multiplied multiple times depending on what opportunities came on the way. And they must have had, and everybody has a different style, let me tell you. All the people I meet, they're all my friends, but very little commonality in the set of stocks. And yet we all have done very well. So the issue is that everybody has a different style. And if there are a million guys, there are a million ways of making money. You have to find your way of making money. And it takes a lot of time and perseverance to find your style. It has taken me almost like 30 years. I would say 25, 30 years to figure out this is my style. and then we coded it as a QGLP. And I swear, when I'm confused, I still go to QGLP. So I'm quite sure everybody has their own philosophy, their own style. Maybe they're not coded it, but they are very, very, what do you call, shaped by their style to pick stocks and sell stocks. So I would think that that takes time. Getting to finding your way of investing, it takes time. And hence, once somebody finds it, it's a way to make money, keep compounding your money. And I'm sure 10 years henceforth, you'll find 10, 15 more guys who would have made actually faster and bigger money than any one of us. I'm quite sure they're all in the making. But right now, what you say is true, that there are some old names which are still in the forefront.
Raamdeo ji, why is that we don't have a global example and even a local example, a trader who's ever become a billionaire? Globally and locally also, we only find investors who are billionaires, whether it's India or it is Europe or even in America. Why is that?
See, fundamentally, if you see the stock market, who makes money? All the entrepreneurs, they made the maximum money. Look at Bill Gates. Look at Mark Zuckerberg, or you look at the your Amazon, Jeff Bezos, or Walmart. Everybody, all the global billionaires, even say Mukesh Ambani here, or Tata's, builders, the entrepreneurs, they made the maximum money in the stock market. Why? See, there is only one exception in this list. That is Warren Buffett, who started with nothing, and in one lifetime, he has made $500 billion in Berkshire Hathaway. So, but that's more of an exception than rule. Okay, so it is very difficult to imitate him. You can learn from him, but his journey to be repeated, it's like a 10 sigma event. So you're not going to find many Buffetts in any part of the world. Because what happens is, see, it's a multiple probabilities. Like you sow the seed at one end, and then every year there is a challenge to that particular outcome, and every outcome has to be positive. So it's like a toss of a coin. 50 times you toss, and every time you have to become winner, and that last guy is the compounded win of the in that particular game. So what happens is, there are millions of businesses which are born, and 99.9% businesses, they die out, or they remain very small in the process anywhere in the world. Only the few successful ones, they become Microsoft. For one Microsoft, there must be millions of other startups in the same field which nobody knows about. But the one who is successful, we talk about them. We read their story about them. We read their biographies. They become the world's richest guy. But nobody talks about the million guys who didn't make it. Okay, so what it takes to make money, it's a compounding machine. Year after year, where exactly you keep making money and don't break down. So that happens in successful businesses. A great business run by great management over a period of time keeps compounding the money. And we, as an outsider, sometimes we understand that machine, that this machine has a chance to become big. And then we buy 1 or 2% at reasonable price. We can never get at the promoter's price. And then what happens is, the promoter is stuck with the company for the next 30 years. We are not committed to stay for 30 years. In 1 year, 2 year, 1 quarter, 4 years, 5 years, we make money sometimes, we lose money sometimes, and we get off the track. And then the entrepreneur goes down all the way, 70, 80%, 90%, and comes back. Like I believe Amazon has seen a price correction of 70% 3 times. But Bezos has not sold. Millions of guys have sold out. So the guys who sold out, they're not making money. But Bezos stayed with his whatever 50, 60% this thing holding, and he's the trillionaire now. So this is the mathematics of difficulty of making money in the stock market, and also the pleasure of making money in the stock market.
We are debating this, Raamdeo ji, that is predicting stock market more like a weather. थोड़े दिन पहले बॉम्बे में साइक्लोन आया था, सबने बोला था cyclone impact would be very high. What happened? Thankfully for us, the cyclone did not
bypass
touch Bombay. It went past Bombay. So do you think predicting the market in the short term is like predicting weather, and we should focus on season? जहाँ बोल सकते हो कि बारिश के बाद ठंड आएगी और ठंड के बाद फिर स्प्रिंग आएगा, फिर उसके बाद समर आएगी.
One of the activity in the market where I would say 99% of energy is wasted is the timing the market. Nobody gets it right, but nobody believes that they can't get it right. Time and again they don't get it right, and yet they try to get it right. Whether a small investor, unknown investor, very innocent investor, he would also try to buy at the bottom and would try to sell at top, you know. So, and then of course the traders and all sorts of investors, they would definitely try to refine their entry price and refine the exit price, but it's not possible to time the market. In last 35 years, I have seen one thing. I just cannot do it. And I have given up much early in the game, like maybe in 94, 95, when I first read about Buffett. One of the biggest learning was this: you can't time the market. And I took it to my heart and I practiced it. In any case, I was a very voracious stock buyer right from 87. I never had cash with me, but that time the amounts were 1 lakh, 2 lakh, 5 lakh, 10 lakhs. So I used to continuously buy stock against my brokerage income also. So I was never timing the market, and we didn't know what is market and all. We were bothered about the stocks. Very simple. But it works. Don't time the market. Like this time, I was very bearish at 75, 7600. If you see the commentary, yes, I must have come in and talked to you also. Yes. The whole thing was looking as if the world is breaking down. And I don't know for how long it will be broken down. But that was only a discussion with you or anybody. I mean, we are discussing what you can see today. But the portfolio strategy was very clear. Remain 100% invested. That saved my skin this time. Because I still don't see how the world is fully done with the COVID. And yet the market is up significantly more than 50% from the bottom.
Lot of easy answer is there is बहुत liquidity. There is a lot of liquidity, and that is the reason why markets are going higher. Now, what is causing liquidity? Low interest rates. A lot of people understand that, and central banks are printing money. Very simple examples. Now, both of us can say that interest rates will remain low for a long time. 1 year, 2 years, 3 years, we don't know, but interest rates will remain low and liquidity will be abundant. So what is the end game for a market which is going higher because of liquidity?
I don't know about the market where it is headed. I'm telling you frankly, and I feel bad when it drops by 3-4%. I also feel a little sad. But actually, I have no clue, and I don't want to apply my mind where the market is headed. I'm interested, while talking to anybody, can I find one idea? Because I have seen time and again, every crisis throws much bigger opportunity in a gap of 1 or 2 years. I'll give you an example. In 92, when first time we started with zero in 1990. Between 1990 and 92, when Harshad Mehta Bull Run happened, we made 30 crores. No speculation, just the continuous buying. Market had tremendous momentum. I've never seen that kind of market momentum in any point of time in my life. And we made 30 crores. It had to come to an end. It came to an end, and it dropped by 65%. Then we thought, now this is going to be Hamali for next 10, 20 years. We are never going to make anything big. In 3 years' time, the market threw the opportunity of software boom. In 95, 96, Satyam, Infosys, NIT, whole lot of companies got listed. And that put, country like India from literally nothing to the software, giant in the world. And we made tons of money between 95, 96 and 2000. So what is there in store? After 2000 boom, again it collapsed. 2002, 2003 was bad. What happened? The global commodity boom happened. China boom happened, where oil went to 150, steel went to $1,000, zinc went to $2,500 from $200, $300. So you don't know what is ahead. I know one thing: some new thing will come. It will be bigger than whatever we have seen in the past. We should keep our eyes and ears open, and we should be willing to take opportunity on our side. So let's not time the market. Let's stay invested. Let's remain solvent, and be happy to participate whatever new game starts.
In stock markets, we always try to look at the next big thing. We use this term, don't focus on where the puck has moved, but focus on where the buck will move.
It's going to be,
But the process of investing is still the evergreen one. The style of investing which has worked in 1950s when there was a steel boom, the same theory was applied. When there was IT boom, the same theory has been applied. Today, there's a consumer boom, the same theory has been applied. So if companies change, if world is changing, if emotions are changing, if communication is changing, why are rules of stock market not changing?
Because this is a age-old, actually stock market is a simple thing. I mean, if you look at it, the guy who makes money, the companies which makes money, in that if you invest, you make money. That's a simple theory. It's only about the earnings. It's a weighing machine in the long run and a voting machine in the short term. So since we are a little patient, long-term investors, we have to keep seeing where is the earnings going. If I believe and if I can kind of with some kind of confidence, I can forecast the growth of the earnings or the earnings of the companies. I think that's where the edge is. And the companies which make money, like I remember whether in 95 or 2003, when Bharti was actually broken even, just about in January of 2003 when the on call happened and they said we are broken even. So I had done my model. I could see in the next 5 years, this company is going to mint money. Like thousands of crores they are going to make, like maybe 3,000, 4,000 crores, 5,000 crores in a year. And for 5,000, I could buy the entire company at $25. So you get to see this kind of spots, and particularly in Indian economy, which is one of the fastest growing economy in the world, and with the potential to become 10, 15, $20 trillion in the years to come. You have this kind of opportunities where in simple businesses, you give birth to a entrepreneur or a company which grows lips and bonds in next 10 years. Like Bajaj Finance, in 2008-9, I think it was less than 500-600 crores market cap. And it created, like in next 10, 12 years, you see what they've done. And it's a very simple business of lending. It's not some rocket science. It's not a Google. It's not an online. So what I'm saying is that the next big thing will come. Now, what is that? I don't have a fix on it. I have to keep watching. I have to keep my ears and eyes open, and the stock market will give that signal.
Why is investing in stock market simple but not easy? It's a business, like I said. You don't need entry barrier. You don't need a qualification. You can start at 18. You can invest till you are alive. Yet, a lot of people don't make money. The club of rich investors and successful investors 10, 15, 25, not even 100 in India.
So this Thomas Phelps in 0 to 100 book, he wrote it very well. To make money, you need very simple thing. 3 things you need. You need vision, you need courage, and you need patience. And the way he says is, people have vision, people have courage, but what is most lacking is the patience. So because in a stock market, now let me just explain what he's saying. In stock market, you're not buying the past. You're buying the future. So you should have that capability to see the future of that particular entrepreneur or that particular company on which you want to invest. So you have to understand. So you must not do what you don't understand. And understanding means understanding the vision and future of that particular company, what it will be in next 5, 10, 15 years or 20 years. So that is one part of it. So people get it by being an insider or by being in the profession, or maybe you read some book, you read some article, and you get a sense of what is going to happen. Like in 2003, I could figure out what is going to happen to wireless company called Bharti Airtel. So I could make money. So you have to be able to see the future. Second, courage to buy. Every single guy stopped me from buying it. They pulled my hand. I mean, they all well-wishers. They said, Raamdeo, this company is too capital intensive and it is not for you. Okay. So you have to have courage to buy. Then third is the patience. I think that is the most difficult part. People do have vision, people have courage, they buy a small lot or big lot, and after it doubles or triples or makes 50%, they run away from there. But the journey of the companies, successful companies, can be 500x to 1000x, 5000x. So people don't sit long enough with the winners. And the entrepreneur is the only guy, whether he's a winner or loser, he sits through. So the guy who, the winner entrepreneur is being worshipped later on. Even the losing entrepreneur is also sitting there, but nobody talks about them. So, you need to have, you need to have vision, courage, and patience. And patience is the most important part of it. Because in compounding, one is the rate of making money. Second is the how long you are there. So let me just give you power of compounding here. In making money, the most important thing is power of compounding. When you do at 25%, you double every 3 years. In 10 years, it goes 10x. In 20 years, it goes 100x. In 30 years, it goes 1000x. Now, in 10 years, 10x, and 30 years is 1000x. So tripling of the time is not tripling of the return. It is a 100x of the return.
Yeah.
That compounding, if you get one right, you are done. And provided that company has that kind of a prosperous life cycle, like Lever, Colgate, Nestle. These companies have been prosperous. They have been filling the coffers of the shareholders for last 20, 30, 40 years with a slower, sometimes faster. But people have become rich. Even Reliance. So what is important is longevity of the company and hence longevity of the money to be made by the shareholders.
In India, some of the best companies are also run by professionals. HDFC Bank, ICICI Bank, Infosys was founded by promoters, but currently is run by professionals. Even a lot of Tata companies.
Yeah.
So how do you go on judging a professional company? Because like you say, focus on the entrepreneur. But the challenge with the professionally run good businesses is that professional managers, they keep on changing. Some of them get ESOPs, some of them don't get ESOPs. They may not have that much of skin, will, or even commitment to the business. So should one avoid investing in professional businesses?
No. See, you have to look at where the magic is happening. I start from the magic. When I see, again here, one of the things is that every company, whichever is successful, it makes money higher than cost of capital. And when the company is made significantly higher than cost of capital, means the jadoo or magic has started happening. Because businesses are nothing but capital input-output machine, whether it is cement, steel, zinc, online business or soap or FMC, whatever you might call the business name. But fundamentally, it is capital input-output machine for me. And the moment companies start making 20-25% return on equity or ROC, it starts getting my attention. We are willing to talk to the management. We'll call up ourselves, we'll visit them, and we'll check around. So what he is doing is so extraordinary. Then ratio analysis and whole lot of things come. So I'm not so much concerned about to start with the management. First thing is whether there is a magic or not, and how long this magic can go on, and how big the magic can become. Okay, so that is one aspect of it. That is basically judging the business. Second is the management then. Who is that management? Where there is a stability in the management, whether there is a passion, whether there is a competence, and whether there is energy. Then judging the management in their own, if it is a first generation entrepreneur, obviously he'll be bukha and like he'll be there for the next 10, 15 years. But if it is a professional management, then there must be a very good history of what you call transition of the management from one manager to other, and there must be a whole lot of things we have to see. Whether this team can really, because it is a professional management, is the new management technique in last 50 years that has longevated the life of the companies. Earlier, what used to happen was, even in America, the entrepreneurial style of management where the businesses used to start with a guy and it will broadly end with a guy. So if it is 30, 35 years of life of that guy, And if he doesn't have an able son and he's not able to give to somebody, it will actually end up. So the modern management, that longevited the life of good corporations. And that is so actually professional management, successful transition of professional management. Say TCS, it doesn't have any what you call leadership transition problem. I mean, one to other, then other. I mean, it is not owned by anybody. It is by the professional guys, and they have done it very smoothly, which is not the case with many other companies. So in fact, professional management in a large company is very good, I would say.
Okay. I'll use the Reliance example just for the webinar purposes, not as a stock recommendation. So I want to make this very clear for our attendees and some of our viewers who will be watching us. This webinar is about learning from Mr. Agrawal's experiences. How does one understand a great company like Reliance? Because when you started your career, they must be in polyester. When I started my career, they had just started setting up the refining business. Today, the business or the company has got re-rated because of not the refining business or the polyester business or the AP business, because of a telecom business. Here's one company which had debt, is always to incubate new businesses. And today, it has become a $150 billion company, first Indian company to reach that milestone. So as an investor, how do you judge Reliance? Because it started with only Vimal, today it is Jio.
I mean, it is such a sad story of, as an investor, I've never made money in Reliance, let me tell you. And, but I have attended I have read almost all years balance sheet. And when they used to entertain analysts far more liberally, when they were smaller, at that time, I was one of the most regular attendees of the Reliance analyst meets. And Anil Bhai used to be taking care of the analysts and all. So we had a great rapport. And then I also got very busy with the businesses. And but even now, it is a pleasure to read the balance sheet of Reliance. So Reliance is a saga of, great entrepreneurship and over a period, even the changing landscape of, in 80s, it was a story of polyester. Then it became a story of refining. Then it became a story of petchem. And now it has become a story of retail and telecom. I mean, most stunned. In fact, in one of the forums, somebody asked me, who is the most gutsy entrepreneur in India? I don't know how somebody asked this. This was 4 years back. At that time, I said, Mr. Ambani, because he's already so rich, he's the richest man and he's making 40,000-50,000 crores profit every year. Why he has to go and risk the entire thing in setting up a telecom company? At that time, just about that concept was coming up and they had bought the license and all. So, I mean, he bet the house in creating this Geo platform, and what they have done in the way world has celebrated his, part selling of the company, it has stunned me. And so I think, understanding the entrepreneurial commitment and the passion and intensity of the passion and the global scale and execution. I think it is finest in the world, and it is very clearly visible that the company has that vision and courage and perseverance to execute whatever their ambition is.
A lot of investors, and I'm again talking about the style which you follow, you typically like to buy a company जिसमें debt कम होता है, return equity, return capital, return ratios are strong. So when I first interacted with you, you were buying Bharti, which had a loss, which was loss-making entity, like you mentioned, and you were also buying Hero Honda, which was a profit-generating machine.
Yeah.
How did you complement both these stocks? Because they both were very different balance sheets.
See, Nikunj, it is about point of time. Say when I was owning both of them, and both are incidentally from Ludhiana. Mr. Munjal came from Ludhiana, and this guy also, Mr. Mittal also came from Ludhiana. So, when we bought 95, 96, first time when we bought Hero Honda, that time it was called Hero Honda. I had read the book, Value Migration, so I could see the scooter market going to, we used to go to Pune to listen to Mr. Bajaj every year in their AGM. So we were fascinated. I think that time, number one company of India, Amazon of India, was Bajaj Auto in 95, 96. We used to all go to Pune to listen to him. And then I could see the motorcycle taking over India. Somehow I could, and there was a problem of getting enough bikes. And how I noticed it is that there was 3,000 to 4,000 rupees premium on every bike if you wanted to buy it tomorrow. So then I said, this is something crazy. Year on year, I can see this premium going on. So let me go and visit the plant and company and all. And that's how we visited the plant and all. And then we bought one. And it was very cheaply available. I think 12, 13, 14 P multiple available. And it was going at about 35, 40%. I always loved the company, which is very profitable and has the potential to grow at 25% plus for at least 3-4 years. That time my vision was not 15, 20 years. I mean, if I could see the profit doubling in 3-4 years, I would be a buyer. That was the whole idea. So then what happened was it became even more profitable than what I thought. And when I bought it 30 bucks, they started giving 100 rupees dividend every year. In 3-4 years time, if you see, they gave 100, 110 rupees dividend in 1 year. So my investment became free in just 2-3 years. And after that, I held on for next 15 years. So while I was holding it in 2003, it was my largest holding, I came across Bharti idea. And in Bharti, what I could see is that in the pace, I mean, the quarterly growth was 100%. The pace of the adoption of, because the country didn't have telephone, 1.2 billion people didn't have more than 40, 50 million fixed line. And so the digging for giving connection was very tough in India. And hence, this wireless thing became an instant kind of a success. And it started growing, ARPU was growing, volume was growing, the growth was all over, and it became profitable. So that time it was below break even, but I could see that in 3 years time it will become 25% ROE. So that what you said, it is not important where the puck is going to be. So ROE today could be minus, but the ROE 3 years or 5 years henceforth must go to 25-30%.
I'm just going to hit the pause button here. Focus on the questions which are coming from the webinar. We've got about 200 plus attendees and they are all eagerly watching us as we speak. Facebook also is taking this live. So we've not spoken about where the puck will move. What we've done is that we've taken the puck 20 years back. Now I will take the puck really forward, like you said, focus on where the puck could move. In a bear market, and if felt like a bear market in March, normally markets become cheap, valuations become attractive, good businesses, they become attractive. Why it is not happening? The good businesses, whether it's a Britannia or an HDFC bank, or for that matter, any good company which qualifies as a good management, is still trading at a premium. IMF बोलता है कि बड़ा economic recession है. Companies are finding it difficult to even give a 2-quarter commentary. And yet, good companies are not cracking. How does one invest in this market when there is fear and there is no attractive bets?
See, there are two things. One, market will always surprise you. Market will always have a new story. The job of the market is to surprise you. So don't worry too much about what has happened in the past. So this time is different. Every time will be different, I can tell you this. Every time will be different. So don't be surprised by that. The rules of the market cannot be set by you. Market has its own dynamic rule making, and you have to perform in that dynamically, dynamic situation. In the long run, it's a weighing machine. That part remains unchanged, I would say. But per se, what's happening in the short term in the market, or what's happening, what went down, where it corrected, where it has come, liquidity, you cannot control on that. And every time this picture will be very different. And second, let me tell you, if you want to make money with the predictions of IMF, आपको गंगा में भी पानी नहीं मिलेगा. समझे ना? आपको अपनी समझ से पैसे कमाने पड़ेंगे. आपको कॉन्फिडेंस होना चाहिए भैया, मैं I can go to the market in whatever market and I can find 2 ideas where it will be at 30-40% discount. It will be available and it is going to grow at 25% in next 3 years, and I'm going to double my money in 3 years. That confidence should be there in you, and at any price you'll find ideas. I'm not saying at the high of the market ideas are fewer, and at the lower price, at say 7,500 index, you could find many more ideas at 7,500.
Okay, lots of questions are coming from the webinars, and this is about, I'm going to pick up a question which talks about how does one go about understanding the integrity of a management, Mr. Agrawal, because judging a good management vision, everybody will say that we are honest, everybody will say we have a vision, and everybody will say that we will pay back to our shareholders.
Yeah. Yeah, so this is a one of the tougher part of the investment process. But I have seen if there is no obvious what you call signals, generally things turn out to be okay. And if you avoid completely the signal given, like when you read the balance sheets, one is, of course, you look at the ratios, whether ROE, ROCE, cash flow, dividend payout. Dividend is one of the very large signal. How do they allocate the capital and how they are servicing that? First thing is whether they're paying honest taxes. If they're paying honest taxes, 25, 30%, whatever is the rate, that itself proves, because the government is the easiest to cheat. At least that's what the businessman thinks. So if he is paying 30% tax and there is a good cash flow, and it is also paid by way of dividend, I would think 80-90% he is done. He's a clean guy. Now the issue is that you go and check in the trade. One of the biggest thing is, if somebody is a jeweler, go and check in his trade. If somebody is a cement guy, you ask his cement, other competitors, or ex-employees, auditors, somebody, you'll find somebody who will speak for him. Particularly when you're investing long term, and it is not obvious, it is not a Tata, it is not a builder who have earned their reputation for last 50 years, 100 years. Somebody is new also, no? So, 3 years, 4 years into the business, 5 years into business. For him, somebody will speak, particularly from the trade, that he's a great guy. And till you find that guy to, like in marriage, if you are looking for your daughter a good match, you will find somebody who will speak for the guy. And it's not that difficult, particularly in a connected world, it is not that difficult. If you put little extra effort, you'll get to know, the dealer will tell you, the accountant will tell you, the banker will tell you. So somebody will speak for him, and that is good enough. If you have done this much, I would think 99% you will not be wrong, at least on the count of management.
So, Mr. Agrawal, in 2000, the face of the index, which is the Sensex and the Nifty, was largely dominated by TMT, telecom, media, and technology. By 2008, infra had a very high weightage. If anybody thought that private banks will be very big, and if you bought into private banks, you made a good return in last 8-10 years. We are in 2020. A big reboot in the world has happened. What do you think would be the face of Nifty by 2025 and 2030?
Very tough question. I mean, I'm not saying that it is, this is a very obviously everybody wants to know about it. And I'm telling you, whatever I'm saying has no meaning. No meaning. I mean, I'll give my guesstimate, but I don't think anybody can, otherwise the fun of the stock market is gone. The real fun is it opens one day at a time, So, so then you can, extrapolate. Once the trend becomes bigger, you can extrapolate and bet on that. But today, when all kinds of confusion is on, I can see the anti-China could be a very large theme. See, my sense is this is a reset for the world, and something very large is going to happen positively after this COVID is done. So one of the things could be, like in last 20 years, China emerged. I don't know whether the Chinese knew. If you had done this interview in China, and there was some Raamdeo Agrawal equivalent out there in 1920, did the Raamdeo China knew in 99 that Chinese economy will be a $15 trillion economy in next 20 years? So it is very tough for anybody to say that. But my sense is that time for India is very, very opportune for next 10-15 years. Look at some of the statistics. In 91, the bankruptcy of India happened with $600 million of reserve, less than $1 billion. We had to send gold for getting some security. Today, you're knocking the door with $500 billion. Of course, the economy is bigger, but yet $500 billion serious and still counting. Maybe will be 600 billion in, the pace at which Reliance money is coming, I think it will be $600 billion before the year is ended. So this is the world's third largest reserve. And why it is important, I try to ask a lot of people and nobody is kind of satisfying me. At least I'm not happy with the answer. It is the third largest reserve after China, Japan and India. There's only one resource in the world which no country can ever print. That is the forex. As an emerging market country, I cannot print. America can print trillions, but I cannot print even $10 billion. So for everything I need forex, and now I have ample forex. That gives me flexibility to follow my domestic policy. So I don't know how it will work out. So that is one thing. Second, after 40, 50 years, oil is soft. Oil is soft and it is looking that it may not go back. It may not go back to 55, 60 permanently. It can spike there. But I think from that 110, 120 to 70 to now 40s or something like that. So you are going to have a very good external account. And that allows, see, you have ample food grains. You have bumper monsoon. You have bumper forex reserve. You have very stable government. Very, very stable government after 30 years. And this government has also realized now finally that it has to be the economy first. So I think we have a good chance. Now whether it will happen or not, that only time will tell. But I think there will be some good opportunities coming our way. Keep your eyes and ears open. And whether it will be, it will come in a place where you would have not expected at all.
It's just a coincidence that a week ago I had Rakesh Jhunjhunwala on the show and he said, look, when I invest, I don't look at PE or I don't look at valuations because अगर 100 रुपए का ITC 1000 रुपए का होने वाला है, so it does not matter whether you buy 200 or 250 or 300 because you can see the size of opportunity. So as an investor, where you think right now, it is okay to pay that premium because stock may not be cheap because markets have figured it out, but the longevity, which is if you pay the terminal growth, if you stay with time for 5-7 years, you can still make a good killing.
I'll tell you, when you have the vision of 10 years or 15 years for the business and you are successful by chance, like that success happens in very few spots. Once in 2 to 3 years or 4 years, you get that successful spot, let me tell you. So first one I got was, I told you, Hero Honda. I could see the market turning in a growing market at 15%, turning from a predominantly scooter to predominantly motorcycle. I didn't know predominantly, but I thought at least 40, 50% of the market, growing market, will shift to motorcycle. And that would have not happened in 1 year. That would have taken 5, 7, 10 years. It took 7, 8 years. And it became 100% motorcycle market. You can't believe it. From 100% scooter, 90% scooter to 90% motorcycle market. So this kind of changes, and like when we look at HDFC Bank in 96, for 1,000 crores, you could buy entire HDFC Bank. And I did buy. I bought 5.61 lakh shares I bought at 40 bucks. But I didn't have the patience. I had the vision and I had the courage, but I didn't have the patience. I sold at 52 rupees for some crazy reason. And then again, I entered the stock in 2003, which I'm holding even till date. So, seeing that next 10, 15 years, in some businesses, directionally, this is not about the P multiple. It is about seeing the prosperity of the businesses that will grow. So that current valuations can never price next 3 or 4 years growth. It can at best price next 1 year's growth or 2 years growth. Exceptionally, in 1 or 2 companies, you can find pricing 3 or 4 years growth.
Again, just for education purposes, I'm not getting into a stock recommendation here. When you see a great listing like DMart, when it got listed at 500, everyone said expensive. No, I'm just trying to understand. I'm not getting into a stock here. There are a lot of opportunities which we have seen in last 10 years, whether it's Asian Paints or HDFC Bank or even a DMart. A lot of people are saying, "Mehenga hai, mehenga hai, mehenga hai." Analysts, they come up with big fat reports saying that it is above the mean value. As an investor, you can see 5 years. So what should one do?
See, ultimately, you have to go by your own understanding. जो नहीं समझ में आता, नहीं समझ में आता. When DMart got listed, we couldn't appreciate the listing price. I mean, we were extremely optimistic about the future and longevity and everything. But you cannot imagine, I never have a cash for buying any stock. I had created 5% cash to buy into this stock. But we still had put a price. but it never touched the price at which we wanted to buy. And it was a rich valuation. We wanted to buy at 50p maximum, and it opened 60p, and never after that the P just kept on climbing. So we are still justifying that we are right, but market is market. Market is right.
You said last time when we interacted, you said, look, Nikunj, what I've learned of late in the last 5 years is that markets are always right. It is our understanding which needs to be improved. So when I asked you that, are you a bit surprised that my markets have gone up? So what are the markets right now telling you? That a very smart, big recovery is coming? Because if markets are always right and if markets are pricing the future ahead, so then markets are telling you that future is bright.
No, market is right means what I'm saying is don't fight with the market. Okay. I mean, whether it is right or, I mean, if market is always right, then what business we have to be in the market? You know, I mean, see, but there are some spots, some companies where market also misprices it. You know, where market doesn't know the story only. And I've seen enough of it, and that's where the fun is. You look at the FI holding, zero. If you see the volume, 10, 12,000 shares. And if you go and ask your analyst, I'm telling you now, I'll give you an example of Aisha Motor. First, I heard the story at 600 rupees. And I was taken to one dealer, and he was very nice and offered masala milk and everything. And he told the story. I came to my office and I told my head of research, let's look at this, let's do some research on this. He says, sir, what is the point in investing time on this? Because there is no volume. And in 1 year, the stock went from 600 to 1800. And then 1800, I get invited from the company for a plant visit and analyst meet. We travel to Indore, we do the analyst meet, and then we enter the stock at 2000 rupees. And what is the call? The call is minimum it will double in 5 years and maximum it can be 10x. In next 3 years, the stock went to 34,000. So what I'm saying is that you cannot fathom too much into the future, and market cannot be efficient for a very long time. But see, entrepreneurial journey, entrepreneur himself doesn't know what the hell market will know. I mean, I'm quite sure. What is his name? Mr. Lal, Siddharth Lal. He would have not known that Royal Enfield will just become such a hottest stuff in next 3 years. And there will be queue of 6 months waiting for the stuff. But it happened. So markets don't have known 3 years before or 4 years before.
You have very humble beginnings. Your father was a farmer. You barely, you really had to work hard even to finish your education. CA was very tough for you. You had to literally, live in a one-bedroom flat to finish your CA. What would you attribute your success to? Is it luck? Is it hard work? Because luck is not in my hand, hard work is in my hand. And I see a lot of people working hard in Bombay and other cities, but yet they don't make money.
I wouldn't know what has worked for me, but one thing has definitely worked. That is, my passion has become profession. I mean, even if I am not as successful as I am, but I enjoyed living. I enjoyed every day going to the market, every day watching, sometimes feel hurt or something like that. Sometimes you lost completely, but I never got discouraged that I cannot do it. It's always a fun. I mean, talking to you now or working in the night or some very complex problem related with the stocks and all, it never terrifies me. I'm always happy because I'm a stock market buff. That was my passion, and somehow that has become my profession. So that is the biggest thing. That alignment is the best thing to happen, and it is a lucky strike, ultimate luck. If what you like becomes your profession, so you're not working ever. I never feel interacting with the companies or entrepreneurs is a pain. It's always a fun anywhere. I mean, I go for a holiday. I go and meet somebody in the plane. I go and meet in the airport. I mean, in 2 hours, if there is one entrepreneur, first time, and it may not be listed also. But understanding the intricacies of how he makes money is very, very lot of fun. So that is I would say that is a thing. And after that, of course, you have to be lucky and hardworking. So we have worked every day, and luck would have been definitely with me.
A question for a lot of my office colleagues who are young. Maybe I'll take your message to them because sometimes they ignore my message, even though I'm the managing editor. Which is the importance of curiosity? To be successful, do you think it is important to be curious?
Yeah, I mean, curious and ambitious. See, you got to have a huge ambition. Bigger the ambition, bigger the achievement. The only thing is that your value systems will be right. Because the moment ambition comes, there are two ways of achieving the ambition. One is the wrong way, other is the right way. Right way could be a little longer. It will require a little more hard work, little more perseverance. But if there is no ambition, there's no fun. There's no dreaming. If there is no dreaming, what is life like? So there should be dreaming. There should be a big ambition, and then the rest all is the journey. That's how I look at it. Curiosity will automatically come because what you are trying to achieve is 10x more complicated, bigger into the future. So that cannot happen unless you have the curiosity. Say if you're not able to get stocks, you're not able to get the stock right. You have to keep asking what went wrong, what went wrong, how do I correct it? And when you find a solution, you'll again get the next 2 or 3 years more. Then again market will come and beat you. Then again you get up and kind of do it.
So you follow a grid of QGLP. Q is for quality, in that L is for longevity. Which are the businesses or companies or need of the societies you think in India have a very strong longevity period from here? Is it private banking? Is it insurance? Is it IT? Is it pharma? Where is it?
Yeah, so I think in India, time and again it has proved that Indian consumer is the most dependable and actually scaling up. As the GDP grows, 60-65% of your GDP goes in consuming. So whatever is being consumed day in, day out, that business will become bigger and bigger. And within them, if the companies have monopolistic position and they have earned their way through in those kind of businesses, they have the longest life. So it is a longevated business with longevated management principles. When both, see, in a terrific business, you can have a absolute useless management. There will be a lot of failures in a same FMCG business where Lever, Nestle, they are thriving. On the other side, you'll find a lot of startups, they go up to 1,000 crores, 2,000 crores, and then they stumble. Or the lack of depth of management or some principles or some misallocation or something. So getting that management depth, that is also very important. So when you are a stable, predictable business, meets a predictable management, competent and predictable management, that gives birth to predictable, longevated company. And there, even if you pay a little more, you're going to make money. Because you might be paying 1 year ka growth as extra price. So one of the things I used to do in 2007-8, when I was very hot on Nestle, I used to tell them, I'm paying I don't expect any return for next 1 year. But the next 24 years after that, I'll make money.
Last 10 years really have not been great for markets. Last 4 years, let me put it this. Last 4 years have not been great for equity investors.
Yeah.
Next 4 years, if one considers the starting point, plus minus 5% here or there, should one expect double-digit returns? Because last 3-4 year earnings have not been there and yet markets have gone up. So what happens for next 3-4 years now? Will earnings come back and will we get double-digit returns?
See, I always keep visioning that next 5 years market will double and we will triple. That is always the formula from any point. I mean, because so much, see, for growth to happen, it's a Lollapalooza effect. Lot of things must come together. The global environment, local environment, political environment, monsoon, forex, and the demand and the consumer behavior. Lot of things must come together for that magic to happen. For 2003 to 2008 in Indian economy, when it grew at some crazy 8-9%, for that to again come back, or even to get 7% again back, I don't know. I'm not a master of macroeconomics, and now nobody, even macroeconomists themselves, cannot predict. So I would not know whether it is going to happen, but my expectation from my portfolio would be at least. I mean, I always pick up the stock looking at doubling in 3 years and 10x in 10 years. That's the whole thought process. But it doesn't happen, every time you're not so lucky.
So we've almost done 1 hour. I'll extend the appointment by another 10 minutes, and next 10 minutes I'll encourage some more webinar questions. In this leg of the last 10 minutes, I'll request Mr. Agrawal to, let's say, talk a little bit about markets and what his understanding of the COVID crisis is. He's already given us a brilliant understanding of how he bought Bharti and Hero MotoCorp at the same time, the whole importance of patience and perseverance, and important to understand the management. Mr. Agrawal, is this COVID crisis, how has this changed you as an investor, and have you made some permanent changes in terms of addition or deletion in your portfolio?
I was most impacted by May 2, Warren Buffett's speech. It was one of the most brilliant piece of speech for 2 hours, 2.5 hours. And he made extra effort to present this time. Going back into the 231 year history of US and don't bet against US. I would say don't bet against India. So my learning is that, he badmouthed the airline stocks for 25 years as the worst possible industry in the world. And 4 years back, he bought 10% in all the 4 companies. And on the COVID, he dumped it again. All of them, he sold it 100% at a loss. So what is the learning? Learning is, he says, in his own way, he's saying that good businesses can turn bad. And we could be wrong in picking stocks and investing in them. But it's not about going wrong. It's about strike rate. How many times? In 10 times, 1 or 2 mistakes are fine. But your strike rate to pick up good company and keep building your portfolio is very important. And when you realize that company is wrong, even at the lowest of the point of the market, you must clean it up. So that's what at least I'm doing. I'm improving the portfolio continuously, but I'm 100% invested. But we are making a lot of changes.
Where are you on PSU stocks? They are cheap. They are
very cheap, unbelievably cheap, unbelievably cheap. Unbelievably cheap.
So are you in a dilemma? Are you in a dilemma that it's a government management? So should I focus on the value in the stock, or should I focus on the quality of the management?
I don't know. I'm scared of giving my completely, very radical view rather. That because they are not mandated to create wealth. Except for that, they want to do everything. Nobody cares what is the stock price. Business is running okay. One is that how do you manage the business, but the business are running okay. But there is no minister or somebody who is appointed to enhance the value of that. See, today's management, one of the job is to see that the stock price reflects the fair value of the company in the stock market. Okay, who's bothered there? They're wonderful companies, monopolistic companies, large global size companies, but there is nobody who's bothered about the wealth creation for the nation. They own 51%. So the wealth creation is for them first, and then minority shareholders. But they destroy wealth for everybody. In a 15 lakh crore portfolio, they should be getting about 2 to 3 lakh crores every year by way of capital gains. Even 10% will give them a lakh crore, like 50,000 crores more. But they actually that much they give it by way of support to the set. So, it has not worked well for us so far. And it has not worked for anybody.
Do you think insurance could create the kind of magic what private banks have created in the last 10 years?
Yes, that potential is there. Because insurance is a very different business. One, they don't lend. So they are never at the risk. Banking is a lending business. So at COVID kind of time, uncertain times, even reasonably good lenders will have tough time. Because the whole risk of the COVID slowdown and damage to the businesses will impact the cash flow of the businesses who are the borrowers of from one bank or other. So no bank is going to get, and that's why you see all the banks, they're raising money, and the best of the banks are raising bigger money. Because they can see the trouble coming, and hence let's buffer it up. So, but then insurance is very different. No insurance company is raising money because they have taken your money. It's more of an asset management company. And So their agency business, they are underwriting risks, and when the risk will materialize, say it's a life insurance company, you have taken life insurance for 1 crore or 2 crores or 10 crores. I mean, you'll keep paying them premium for next 30, 40 years, and then we'll see what happens. So they are large asset management companies and very different from, they're business of finance, but they're not lenders. It's very different. And the entry barriers are much higher than the lending. You can actually run a successful lending business even with $1 million. आपके पास 5 crore है, आप गांव में बैठे हो, you can run a nice money lending business. You can't do insurance. Power of issuing insurance policy is only with the insurance company.
You mentioned Atmanirbhar Bharat, which is self-reliant India. America is saying America one. Everybody has their own definition. Now, corporate taxes have come down. One would imagine that government will also try to increase more manufacturing towards India. So revisiting manufacturing companies, revisiting good old blue chips in that space, could that be a theme for next 4-5 years?
Quite possible. Because if you have, see, the world's biggest manufacturing base, by scale, by variety, anything, last 20 years has been China. I mean, even our manufacturing base has been eroded by China. Forget about US. So clearly that's the den of manufacturing. But somehow this geopolitical situation is such that that even the labor cost in China is significantly higher than India now. Their labor cost is more like $3.5, $4 per hour. Ours is still $1.5, $2. So there is a clear preference for us. We have the size. People prefer to get it from India. They can get it at reasonable price. So the environment which is shaping up now, it could be favorable for India manufacturing. But whether it will become big, will it become a storm? That only time will tell.
Okay, last but one question. Where do you see the IT sector moving? Everybody is talking about digitalization and automation and AI. Indian companies do not have a big expertise in creating product. All of them are saying that we are doing digital, but we know that they are essentially doing back-end work for a lot of services. Can India see a Google or an Alphabet or a big company next 4-5 years?
Yes, why not? This geo platform they're talking about, that is what is the excitement right now. I mean, whether they will be able to get the success of global giants, but it's a lot of promise which is there right now, and that is what the world is excited about, and that's why all these checks are pouring, I believe. One of the reasons, apart from the telecom excitement, is also the icing on the cake of a success, large success in the their e-commerce. Through the grocery, through the retailing, through the whole lot of things, all the online platform. So that could be the birth of one of the large, seriously large platform business out of India. But success of one will give birth to many other businesses, and I'm quite hopeful in next 5-6 years we'll see many more platforms, platform kind of businesses, which will come in India. That could be the next wave. You never know, because one. The thing starts with one. I remember in 2002-3, only Unitech was listed as a large, real estate company. By 2007-8, there are hundreds of them.
Yeah.
So I don't know from where they came. So like that, you'll be surprised how many listings can come in so-called platform business. And that could be one large businesses in next. That could take away the next 10 years boom. Yeah.
Okay, I have to take a question from a webinar and then I'll wrap it up with one question from my side. Markets, they follow a cycle. Last couple of years have been tough for small caps. Globally, mega caps are getting created. What is the scope for, let's say, buying a SIP in a small cap or a mid cap, and in general next 3 to 5 years where are small and mid cap stocks?
Yeah, possible. See, ultimately, all the entrepreneurial birth, the new companies start as a small mid cap. No company, very rarely a company that day one is say 10 billion or 20 billion. Even in US, you find mid cap. I mean, by their relation, it will always be a mid cap company. I mean, when Infosys started in '93, it was 100 crore listing, 100 crore market cap, and from there to become whatever it's become. HDFC Bank was a 1,000 crore company. It was like a 100 or 115 rank. I mean, when the listing happened, and today it is in top 3 or 4. So when the rank changes, that's how the successful company. I mean, many successful companies will be born at the mid and small level, and from there they will scale up. Like Bajaj Finance in 2008-9, it was, I think, less than $100 million market cap. So I think the journey of successful large companies will start as a successful mid-sized company, but there are always hundreds of mid-sized potential companies. You have to figure out which one has the big future.
Okay, last question, sir. In 80s, it was difficult to get information about a company. In 90s, information became easy. In 2000, information is not an edge, and today information is no longer an arbitrage. What role do you think information will play, and what edge do you think one should have in order to be a good investor in this decade?
Yeah, so information is always useful, and nobody has an edge in knowing something about the businesses. It's about the analysis. What do you do with the data? Data is there, but how you find your way of precisely looking at the future of the company. So analytical frameworks, and actually adhering to your investment philosophy. So those things are going to make a difference, because it is going to become competitive, very, very competitive. Because with the 50, 60 brilliant analysts covering any worthwhile companies, what will happen is that the area of inefficiency will shift from top 50 to next 50 to the next 50 and the next 50, like that. Smaller companies will have fewer and fewer attention. So the efficient frontier or the most efficient stocks where you will not have an easy win will be the top 30 Sensex companies and then Nifty companies. And beyond that, then the efficiency will start going down. So you have to be the arbitrage. Even see, in a mid-sized company, you can have even information arbitrage, because the company is just not known. You know, company itself doesn't do much of con call, or no visitors are there, or business itself is not understood. I have come across many companies. When I go, I am surprised that this is the business. So if I am surprised, I'm quite sure the market will also be surprised.
You always talk about Warren Buffett as a professional commentator. Sometimes I like to quote Warren Buffett or Howard Marks or Ray Dalio. Before we wrap up today's webinar, let me hear an original Raamdeo thought. Rakesh Jhunwala gives me a lot of original thoughts. So how about today we wrap with an original Raamdeo thought, which you want to apply?
No, I mean, I don't know. It's very, I mean, I would like to give something which is worth, kind of remembering. But one of the things I see is that जो दिखता है वो बिकता है. And आपकी समझिए, आपका सबसे बड़ा दोस्त है. यदि आपको जो सच चीज समझ में नहीं आ रहा है, आप करो मत बाजार में. It will keep you in good shape. What happens is that we talk about great business, great management, great this, longevity, creativity. But the real thing is, have you understood the future of the company? And I think till you have not understood, so there is a piece of diamond in your pocket. I don't know how to evaluate diamond. How do I figure out it is worth $1 million? I will say maybe it's shining, so it must be $1,000 or something. So समझ जो है, एंड बिजनेस को समझना बहुत इंट्रिकेट होता है. कई बार बहुत जल्दी समझ में आता है, कई बार बिल्कुल ही समझ नहीं आता है. सो हाउ डू यू बिल्ड योर मॉडल टू अंडरस्टैंड द फ्यूचर ऑफ अ बिजनेस इज द की. सो आप अपनी समझ से काम करें.
And there are no right or wrong in stock markets. Money can be made by trading also, and money can be made by investing. But you think for you investing has worked, trading has not.
No, I'm not. There are million guys, million ways of making money. You find your way of making money. You are passionate about trading or trading come funda come technical ये वो करके. But so long as you are making money, you don't have to make any amends. Just keep making money.
When you get recognized on the street now, when people approach you, for a selfie, for an autograph, I'm sure people must be asking you, Raamdeo ji, tip bata do. So why don't we end today's webinar with the tip?
Don't time the market. I'm telling you. Don't time the market. Is very tough recommendation of mine. It is so much ingrained in us to time the market that you don't want to de-stress your life. I'm telling you, it is so de-stressing if you don't bother about timing the market. Last 2 days, the guys who are master of timing the market, they walk with me. I asked them. Both of them, they said today market is down. And you see what happened in last 2 days. I'm not saying that they are right or wrong. I'm just saying it is very tough to figure out why the hell we stress so much.
So Monday morning when you meet those two people, what will you tell them?
I'll again ask them. Every day I ask them.
Well, really appreciate your time. Thank you so very much that you've taken more than 1 hour out on a Saturday afternoon. Thank you for walking us through not only the last 20 years, but the next 10, 15 years, how they look like for India and for an investor like you. Stay safe, sir, and thank you for joining us.
Thanks. Nice talking to you.
Thank you very much. I want to thank everybody who also joined us on the webinar. Of course, parts of this will be played on ET now starting from Monday. Thank you very much.